At this point, we'll take a look at the larger time frame and just get a sense of, what may be coming over the next couple of days here. So, right now the market has been stuck in this trading range and this balance. We've had this, larger time frame resistance up here for a while. So the market hit that, failed, rejected, came back down. The Russell had been leading to the upside, and today it was leading to the downside. So, if we look over here, we can see that, this 1562, 1563 was an important area in the Russell, right? We have kind of a short-term balanced area low here, and the Russell took that out in a very clean way this morning, which just confirmed the intraday bearish bias in the S&P as well. And then it got extended into yet another, kind of area of support, right? Another little balance area over here, got extended to the bottom of it where buyers stepped in. So, based on this view right now, if the S&P now takes out the 2763 to 2766 area, which has been the balance area low for the last couple of weeks here, if the S&P takes that area out, then it tells us that the sell side is dominant in the short term, and then that can lead to a move down into, this previous little breakout area. So that can lead to a move into 2752, followed by, the lows over here around 29 to, 33 or so. So then we can start testing lower zones, right? And then the bigger pattern would be that of a balance breakdown. Now, because this downside move started at the upper edge of this short-term balance, even if it breaks down, it can still find buyers at the support zones within this previous 3-day range. So, this is a strong area of support, 63 to 66. If the market breaks down through this area, then, what's the pattern going to be on the larger time frame, right? That's something to think about. So we had this wide range, right, over here. The market popped up towards the 61.8% retracement, which is usually a very good inflection point. Failed over there, right? So you can kind of visualize it. Straight line down, pop 61.8, comes down, tries to continue, but now it's at the short-term inflection point. So now the question is it going to continue or not? If it doesn't, if this area holds, then we're still stuck in the recent balance. If the market breaks down below this area, then think about kind of what the bigger pattern would be. Straight down, up, and then straight down again, right? So what's going to happen in that case is that it can get overextended or exhausted into one of these areas of support. Now below 63, 66, we have support at 52 to 54. These support zones are valid. And then we have larger time frame support at 29 to 31.5. So now any of these zones can technically attract buyers. And, we don't know exactly which one is going to provide the better bounce. The more the market gets extended lower, the higher the odds of a intraday bounce. This is all intraday stuff that we're talking about. But because the bigger pattern would be big swing down, big swing up, big swing down again, that's one of the main reasons we can expect buyers to step in at the support zones. And it's kind of a similar principle to, what you saw even on the day time frame today, where the market goes down, pops up, goes down, pops up, right? It's eventually heading lower, sure. But there are all these bounces in between because of the way it's heading lower. Big swing, pop, right? So when it goes down like this, it just gets exhausted. It gets oversold, then it bounces up, gets oversold, bounces up. Same principle can be applied to the larger time frame as well. So if we break down below 63 to 66, then sellers are dominant, right? We know that. But if the market gets overextended from there, into one of the support zones, especially like 29 to 31.5 or something, then that could still be a very good spot for an intraday bounce, right? But in the immediate short term, sellers would become dominant below 63 to 66. Like the intermediate term bias would favor the sell side then. This larger time frame resistance would have held and shown a big failure. So things would get more bearish if we broke down below 63 to 66. Now, in order to get a successful breakdown below that area, we should see panic in the market. So in order to get a proper breakdown below 63 to 66, not just a poke below followed by a bounce back into it, we would need to see some level of panic, right? We want to see anyone who bought within this trading range exiting their trade. Usually when that happens, you see big downside momentum, you see stops being hit. Like it's very obvious that, okay, sellers are definitely in control. I don't want to take, longs necessarily in that scenario. I want to focus on getting more aggressive on the short side and use the zones, at least the earlier ones, as downside targets. And then once the market gets overextended, then I can consider a long setup again. But in order to get a successful breakdown, we would need to see trend down type behavior on the day time frame, tick holding below zero, AD heading lower, all that kind of stuff. And we want to see some level of panic in the market. We want to see anyone who bought here puking out of their trade. And if that's not happening, like let's say the market tries breaking below 63, but there's just no momentum to the downside, the market's not really showing us any kind of panic, well, that's where the false breakdown type scenario can come into play. And we want to be at least aware of that. We don't want to have just a singular view. We want to have a view that's conditional, that talks about, okay, if we're going to get this break, then this is what we should see. This is how a breakdown should happen. And if that doesn't happen, then what does that tell us about the market, right? That's where the false breakdown scenario could take place. And anyone who gets overly bearish on a false breakdown basically ends up getting stopped out, and then the market can go right back up into 27.85, 27.92 half, right? Then those high volume nodes can come back into play. So that's how the market is set up right now. But, over the last few days, of course, the sell side has been much more dominant. And now the question is, are we going to get a breakdown below 63, 66, or is the market still going to stabilize? And we should know within the next 1 to 2 days. We have some economic reports out tomorrow and on Friday, which could help kind of drive this along one way or the other.